Is Tesla stock undervalued? Still thinking Tesla stock is expensive? Well, after this statistic breakdown, you will change your mind. While Tesla stocks were never cheap at first, they've had the biggest success story on the stock market in the last few years. Although this year, the company hasn't been doing quite well. Tesla stock over the past decade rose to $1 trillion market cap, but this year it is down 69% and now has a market cap of less than $400 billion while making this video. As Tesla stock is currently experiencing a dip, many retail investors and firms are taking this opportunity to buy it as they are optimistic about its future growth. But considering the problems faced by Tesla this year alone, some investors are steering clear of its stock. However, many analysts predict that the Tesla stock is currently undervalued and in the nearest future will be too expensive for retail investors. So, should you buy Tesla stock or not? Why is the Tesla stock down? The shares of Tesla have fallen near 50% since the start of October. It dropped to $125 in December alone, the lowest level the Tesla stock has ever been since November 2020. This is not a general problem, as other major automakers like Volkswagen, GM, and Ford have been slightly up since October. But why is the Tesla stock price down? Let's take a look at some of the reasons. Twitter scandal. One of the reasons for the drastic decline in Tesla stock is that the CEO of Tesla, Elon Musk, recently bought Twitter. He acquired Twitter for $44 billion, which he acquired through selling his Tesla holdings. But we will not go through all the details in this video. Suffice it to say that he is not really focused on Tesla now, as he is exploring other business. And with this recent scandal on Twitter, he's losing some potential customers who pick offense at what he says on Twitter, and in general, causing the public to lose trust in Elon. Management issue. Tesla's delaying mass production of its trapezoidal pickup truck, the Cybertruck, contributes to the pressure on its share price. It showed off the design of the Cybertruck in 2019 and was expected to begin production in 2021. Another reason for the backlash Tesla faces is because of the over a year-long delay in updating its customers' cars with the promised self-driving technology through software updates. As such, more customers are suing Tesla in the US to attain a refund for self-driving systems they paid for and expected delivery already. Increased commodity cost. For a long time now, Tesla has benefited from its pricing power and low commodity cost of its key supplies, thus leading to a higher margin. But these benefits are not reversing as Tesla faces cost pressure from rising commodity prices. Metals like cobalt and lithium, primary components used in EV batteries, have increased in price over the last year. This issue will only likely worsen as many companies are now investing in EV battery production. Higher competition. Other EV automakers, especially in China, are putting up a good fight against Tesla, thus pushing the price of its stock further down. With dozens of competitors investing hundreds of billions of dollars in the EV market, it explains why the pricing power Tesla holds will likely deteriorate, and the stock is declining. What does the future hold for Tesla stock? Many analysts believe that Tesla is far from going out of business. Instead, they are optimistic about the company's future and encouraging retail investors to buy the dip of Tesla stock. As some goes far to say only institutional investors can afford to buy the stock price of Tesla, and believes it will be likely too expensive for the casual individual investors in the future. In ARK's 2021 open source Tesla model, the firm outlined its expected value of the Tesla stock to soar as high as $3,000 per share in 2025. Although ARK Invest had to push the forecast to reach $3,000 USD in 2026 rather than 2025. This is due to material used in production increased in price, assumptions in autonomous ride-hail, and estimates for input and capital efficiency. So why are analysts so optimistic that Tesla stock will soar in the future? Analysts believe long-term investors should buy the dip because Tesla isn't just in the industry to produce EVs. Instead, it is a broad company involved in self-driving technology, AI, batteries, renewable energy, robotics, and more. In particular, Tesla's prospective robotaxi business line is the key driver that could contribute up to 60% of expected value and more than half of expected EBITDA, earnings before interest, taxes, depreciation, and amortization in 2026. According to ARK Invest, they suggest that Tesla may commercialize autonomous ride-hailing. If Tesla commercializes robotaxi, its financial result will be massive. Now that the Tesla stock price is down, it is the best time to decide whether to buy or not. Following the price pattern of the Tesla stock, this year alone might not be encouraging, but analysts predict long-term investors are up for major interest if they invest in the Tesla stock now. Some analysts also predict that the price of Tesla stock may fall lower than where it is currently, so it could be wise to wait a little longer and observe how the shares perform in the next few months before buying the dip. But based on the analysis of several experts, Tesla stock prices will surely soar again, considering several innovations in the company that can help boost the price.